There are two important methods to calculate the depreciation. One is straight line method, other one is written down value method. Now what is the journal entry to calculate the depreciation? Depreciation account data to asset account. What is the entry for selling of machine? So your entry will be bank account data to machine account. So first we have to record entry for selling of machine and record entry for profit or loss on sale of machine. Then if any new machine is purchased, so we have to record the entry. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the 5th session of chapter 7, that is Depreciation, Provisions and Reserves. My dear students, we had already learned few of the concepts relating to this chapter. That is all the theory concept. Also, we have solved few of the problems relating to depreciation. So, let us quickly recall what we have discussed in a previous session. So, in a previous session, I have covered this topic, that is, we had solved a very important problem for 12 marks. That is, 12 marks problem on calculation of depreciation under straight line method. So, hope you remember there are two important methods to calculate the depreciation. One is straight line method, other one is written down value method. So, time being, we are going to solve problems on straight line method, then we shall go for written down value method. So, I have told you the weightage of this chapter is total 14 marks, where you can expect 12 marks, one problem, that is on calculation of depreciation. So they might ask on both the methods. So it may be on straight line method or on written down value method. So make sure that you will learn both the methods also. So you'll get any one of the method to calculate the depreciation, either straight line method or written down value method. And for 2 marks, you can expect a theory question. So, or you might expect a simple problem on calculation of depreciation where you have to use a formula. For example, calculation of depreciation under straight line method. So, what is the formula? That is cost of the asset minus scrap value divided by life of the asset. Using that formula, you will get the simple problem for 2 marks also. So, this is the concept what I have discussed in a previous session. In today's session also, I am going to continue with one more problem, a quite different problem on calculation of depreciation under straight line method. Now go through the problem here. Excel Company Limited. So the name of the company is Excel Company Limited. So let us see what they have done. They have acquired a machine for rupees 80,000. So they have purchased a machine for rupees 80,000 on 1/7/2014. Here in this problem, very easy to solve the problem, but you have to be very careful with the dates as well as the amount. Now, when did they purchase the machine? So they have purchased a machine on 1/7/2014. Correct? And spent rupees 20,000 for its installation. Now, they have purchased for 80,000 and spent 20,000 for its installation. Now, what is the original cost of the machine? So, that is purchase price plus installation charge. Purchase price and installation charges. Now, what is the purchase price? That is rupees 80,000. So this is the purchase price and they have spent rupees 20,000 for its installation. So you have to add that also. So rupees 20,000. So therefore the original cost of the machine is how much? That is rupees 1 lakh. Hope you are clear with original cost of the machine. So this is original cost. In the same way, suppose they have given transportation charges also. Then you have to add so that you will get the original cost of the machine. On 1/4/2016, again, so they have purchased the first machine on 1/7/2014 and the worth of the machine is how much? That is rupees 1 lakh. Okay, so this is about the first sentence what they have given. Next they have given on 1/4/2016 it sold the machine for rupees 80,000. Now what is the financial year? Here you have to be careful. I have told you. So first machine was purchased on 1/7/2014. Our year ending is 31st/3/2015. So they have clearly told year ending will be how much? That is 31st March of every year. So they have told that is the accounts are closed on 31st March of every year. So 1/7/2014 to 31st/3/2015 will be the first year. Now coming to the second year. So when does the second year begins? Second year begins on 1/4/2015 to 31st March 2016. So this would be the second year. Now coming to the third year. So what is the third year? 1/4/2016 to 31st March 2017. Now they have clearly told we have to prepare machinery account and depreciation account for 3 years. Now we are familiar with these dates. So our 3 years will be 1/7/2014 and it ends on 31st/3/2017. So these are the 3 years. Now let us see in between what happens. On 1/7/2014 they purchased a machine. So let us take it as M1. So they have purchased a machine. Okay. Next, on 1/4/2016, 1/4/2016 means what? In the last year, that is here, they have sold a machine for rupees 80,000. They have purchased for 1 lakh, but they have sold for how much? It is 80,000. They have sold the machine for 80,000. And on the same day, it purchased another machine. So on 1/4/2016 itself, they have purchased one more machine for rupees 70,000. So let us take it as machine 2. What is the value of machine? 70,000. Hope you are clear with this. On 1/4/2016, they sold the old machine for rupees 80,000 and they have purchased a new machine for rupees 70,000. The company writes off depreciation at the rate of 10%. Now they are asking us to calculate the depreciation and what is the percentage they have given? That is 10%. 10% is a depreciation on original cost every year. So you know straight line method is also called as original cost method. So we are going to calculate depreciation at 10% on original cost every year. The books of the accounts are closed on 31st March every year. So we have written the date already and the year ending will be 31st March every year. The company charges depreciation to asset account. So here we are going to charge the depreciation to asset account. We are not going to create a new account, that is provision for depreciation account. We are going to directly calculate the depreciation to asset account. Prepare machine account. So they have asked us to prepare machine account and depreciation account for the first 3 years. So hope you are clear with the problem. Okay, I have clearly explained you what is the original cost of the machine, when they have purchased and when they have sold the old machine and when they have purchased the new machine also. So here we are having 2 machines. Okay, you have to be very careful. So before going to the journal entries, so better you write these dates and what the transaction happened in that particular financial year, so that it will be easy for you to calculate or prepare ledger accounts, that is machinery account as well as depreciation account. Hope you are clear with the problem. Now we shall directly go through the next concept, that is profit or loss on sale of first machine. So I have told you they have sold the old machine on the 3rd financial year, correct? On the 3rd financial year, they have sold the machine for rupees 80,000. Now we have to see whether they have earned profit or loss by selling that particular machine. So it is very important. So we shall calculate this later. First we shall begin with these 2 years. So first we shall record entry for these 2 years. Then while coming to the last year, I'll tell you how we have to calculate profit or loss on sold machine. Okay. Now we shall directly go through the journal entries. I'll come to this later. Now first we are going to prepare machine account. You know the journal entry for this. Now what is the first entry? So first entry is to purchase the machine. So what is the entry? Your entry will be machine account debtor machine account debtor to bank account. So this would be the first entry. Okay, for purchasing of machine. And you will record this entry only in the first year, because that machine will continue for all the years, correct? Until it has been sold, this machine will be continued for all the years. Now your second entry is for calculating the depreciation. Now what is the journal entry to calculate the depreciation? Depreciation account debtor to asset account. So your entry will be depreciation account debtor to, now which is the asset here? Machine. So to machine account. So this would be the second journal entry. That is for charging the depreciation. Next, third entry is for transfer of this depreciation to profit and loss account. Now what is the third entry? So your third entry will be transfer of depreciation to profit and loss account. So your entry will be profit and loss account debtor to depreciation account. So this would be your third entry. If you know all these three entries, very easy to prepare the ledger accounts. Directly go to the first year. So you know we have purchased a machine on 1/7/2014. Now what is the journal entry? So your entry will be machine account debtor to bank account. So first we shall prepare machine account. Write the neat heading machine account. So you know the format of ledger. So what is the format of ledger? We'll be having debit as well as credit side. Under debit side, date, particulars, journal folio, amount. Under credit side also, date, particulars, journal folio and amount. And always remember, don't forget to write this DR as well as CR, which indicates what? Debit and credit side. Now coming to the first year. So when did we purchase a machine? 1/7/2014. So see the date, 1/7/2014 we have purchased the first machine, correct? And what is the cost of the first machine? I have already calculated here. Original cost is how much? 1 lakh. That is 80,000 plus 20,000 installation charges. So it is 1 lakh. So how to write? To bank account, because your entry is machine account debtor to bank account. So cost of first machine is how much? 1 lakh. In that particular year, now see the dates once again. We have purchased the machine and we have not sold any of the machine in the first year. At the same time, we have not purchased any of the new machine. So for this machine which is there, we have to calculate depreciation at the end of each year. Now coming to the first year, end of first year is 31/3/2015. We are going to calculate the depreciation on machine 1. So how to calculate the depreciation? 31/3/2015. What is the entry to calculate depreciation? Depreciation account debtor to machine account. So how do we record? By depreciation account, we are going to calculate depreciation on first machine. Now what is the value of machine? We are going to calculate on the original cost, that is 1 lakh. And what is the percentage? They have clearly given it is 10%. But whether that machine was there for the whole year? No, it was purchased in between, correct? When did we purchase? On 1/7/2014. Now, what is the year ending? 31/3/2015. So, from 1/7/2014 to 31/3/2015, it was there in that particular financial year. So, we are not going to calculate for the whole year from when they have purchased till the end of financial year. We are going to calculate the depreciation. So, how to calculate? So, 7, 8, 9, 10, 11, 12, 1, 2, 3. So, 9 months it was there in that particular financial year. So, into 9 divided by 12, so we'll get 7,500. So, how to calculate? 1 lakh as the original cost of the machine into percentage of depreciation is 10%. They have given in the question into, we are not going to calculate for the whole year because it was there only for 9 months in that particular financial year. So, 9 divided by 12, you get 7,500. Only this much. Now, we are going to balance both the side. Now, the total of debit side is 1 lakh. Whereas the total of credit side is how much? Only 7,500. So 1 lakh is greater. Write 1 lakh both the side minus 7,500. You get a balancing figure of 92,500. So always remember, After recording the entries, you will leave some space because you have to write balance carried down. Okay. So, 1 lakh is greater, you will write both the side. Minus 7,500, you will get the balancing figure 92,500. So, 31st-3/2015, that is end of that particular financial year, by balance carried down. How much? 92,500. Hope you are clear with the first year. Now come to the second year. Let us see, anything happened in the second year? No, nothing. So we are having only one machine in our business. So we have to calculate depreciation at the end of the financial year. Now this is a straight line method, and always we are going to calculate depreciation on the original cost. Now go through this. So in the second year, what is the second year beginning? That is 1/4/2015, correct? So we have already recorded the date 1/4/2015. So this is second year beginning. Whatever the amount we have carried down here, we have to bring down that balance. How to write? To balance brought down. Here we have recorded as by balance carried down 92,500. Now record it as to balance brought down 92,500. Now we have brought down the balance. Now in the second year nothing happened. They have not sold the machine. At the same time they have not purchased the new machine. Now what you have to do at the end of the second year, that is 31st-3/2016, we have to calculate the depreciation for the whole year. So how to record? By depreciation account, and remember in straight line method we are going to calculate on the original cost of the machine. Now what is the original cost? 1 lakh. 1 lakh into what is the percentage? 10%. Now here no need to calculate in terms of month, because the first machine was there for the whole year. That is, in the second year it was there for the whole year, because they have not sold in between. In the same way they have not purchased new machine in between. So we are going to calculate for the whole year into 10%. So we will get 10,000. Hope you are clear with this. Now as usual we are going to balance, and the balancing figure has to be carried down for the next year. Now in the debit side it is 92,500, whereas in the credit side it is only 10,000. So 92,500 is greater, write both the side, minus 10,000 you will get 82,500. Hope you are clear with this. Now this amount you have to carry it down at the end of that particular year. That is 31st-3/2016, by balance carried down 82,500. Hope you are clear with these 2 years. One more year we have to prepare account. Now go through the next year. Yes. So we are going to continue the account. Now whatever the amount carried down here, you have to bring down at the beginning of next year. So beginning of next year is 1/4/2016, to balance brought down 82,500. But in the last year what happens? This first machine what we have purchased, they have sold that machine. Correct? And they have sold that machine at the same time, on the same day they have purchased new machine. Now what is the entry for selling of machine? So your entry will be bank account data to machine account. So for selling, so the machine is been sold. What is the entry? Your entry will be bank account data to machine account. So this is for selling of machine. Now go through the dates once again. So we have recorded here. So 1/4/2016 to 31st March 2017 will be the last financial year. But when they have sold the machine, on the beginning of the date only, that is on 1/4/2016, they have sold machine 2 for how much? Machine 2 for 70,000. Now we have to see whether they have earned a profit or loss by selling that particular machine. For this we need this calculation. So cost of first machine. What is the cost of first machine? That is 1 lakh. So we are going to calculate profit or loss on first machine, because first machine is sold. Correct? So cost of first machine is rupees 1 lakh. But whether we have to calculate 1 lakh minus 70,000? No, because for the 2 years we have calculated the depreciation. So we have to deduct that depreciation. So less total depreciation. Now what is the total depreciation in the last 2 years? In the first year, what was the depreciation? So depreciation was 7,500, whereas in the second year it was 10,000. Minus that, So we'll get what? So 7,500 in the first year, second year it is 10,000. We are not going to calculate on the third year because in the beginning of the third year only the machine was sold. Suppose it was sold in between or at the end of the financial year, then till what duration it was there in that financial year we have to calculate the depreciation. But here in this problem, machine was sold at the beginning of third year only. So no need to calculate depreciation for third year. So 7,500 plus 10,000, so it will be 17,500. So 1 lakh minus 17,500, then what is the book value? It is 82,500. In the sense, value of machinery on the date of selling is how much? 82,500. But what is the business has done? It has sold for how much? 80,000. But less selling price. What was the selling price? 80,000. Then actually the original cost was 82,500. But they have sold for 80,000. So profit or loss? It is loss, correct? So therefore, loss on sale of machine. How much is loss? 82,500 minus 80,000, that is rupees 2,500 is a loss by selling the machine. Now in the third year, we have to take this loss also. Okay, now we shall go through the third year. Yes, so we have brought down the balance, that is 82,500. But on 1/4/2016, they have sold the machine. I have told you already the entry. What is the entry? Bank account data to machine account. So, record the entry for selling of machine. By bank account, sale of first machine. So, at what price they have sold? They have sold at rupees 80,000. So, we have already seen in the problem. So, they have sold the first machine for how much? That is for rupees 80,000. So, record that. By bank account 80,000. This is the entry for selling of machine. Now we have to record the entry for profit or loss on sale of machine. Now in this problem it is loss. So what is the entry? Loss on sale of machine debited to machine account. Suppose it is profit, then machine account data to profit on sale of machine. But in this problem, it is loss. Now we shall record the loss on the same day when it has been sold, 1/4/2016, by loss on sale of machine. Now what is the loss? We have already calculated. So our loss was how much? 2,500. So we have already calculated. So loss was how much? 2,500. So record that loss. Now, what they have told, now we are done with the old machine, that is machine 1. So, they have sold the machine and we have recorded entry for loss also. But on the same day, they have purchased one more machine. Okay, now we are done with the old machine, that is machine 1. Now come to machine 2 because they have purchased one more machine on the same day. Now go through the table here once again. That is on 1/4/2016, they have purchased one more machine for rupees how much? 70,000. Correct? So we have to record entry for that also. Now what is the original entry to purchase a machine? Your entry will be machine account data to bank account. Correct? So we have to record entry. So 1/4/2016 to bank account, cost of second machine. What was the cost? That is 70,000. Clear? Cost of second machine is 70,000. Since it is purchased in the beginning only, we have to calculate depreciation for this second machine. So this is the second machine. Now we are done with all the transactions relating to first machine. Now come to the second machine. So at the end of the financial year, that is 31st/2017, so we have to calculate depreciation by depreciation account on second machine. So what is the value of second machine? 70,000, and it was there for the whole year because we have purchased in the beginning of the year only. So 70,000 into 10%, the depreciation is how much? 7,000. Hope you are clear with this. Okay. So first we have to record entry for selling of machine and record entry for profit or loss on sale of machine. Then if any new machine is purchased, so we have to record the entry. And for that machine, we have to calculate depreciation also in that particular financial year. Now we are done with this. We have to balance both the side and the balancing figure has to be carried down. Now if you see the total of debit side, the total is 1,52,500. Whereas coming to the credit side, you'll get a balancing figure of 63,000. So this 63,000 has to be carried down for the next year. Since they have asked us to prepare machine account and depreciation account for the 3 years, so we have prepared how to wind up our machine account by bringing down the balance of third year. So whatever the amount you have carried down, that's 63,000, you have to bring down the balance, that is at the beginning of next year, 1/4/2017, to balance brought down 63,000. Hope you are clear with machine account. Now, we have to prepare what? Depreciation account. So, in each and every year, we have written the depreciation. So, that amount has to be transferred to depreciation account. So, what is the entry for charging depreciation? Depreciation account data to machine account, and that depreciation has to be transferred to profit and loss account. Your entry will be profit and loss account data to depreciation account. I have already told you the entries. Now, always depreciation is calculated at the end of each year. So, end of first year is 31st/8/2015. Now, what is entry? Depreciation account data to machine account. Now, let us see what is first year depreciation. That is 7,500. So, record that depreciation 7,500. Now, transfer that depreciation to profit and loss account. That is end of the financial year only by profit and loss account. That is on the same date. 7,500. So, both the side will be 7,500. In the same way, coming to the next year, what was next year depreciation? That is 10,000. So, how to record? To machine account. To machine account, that is in the second year, 31st/3/2016, to machine account 10,000. Now, transfer this 10,000 to profit and loss account. So, how to record? By profit and loss account. On the same day, that is end of the second year, by profit and loss account 10,000. So, both the sides will be 10,000. Now, coming to the third year. So, what was third year depreciation? That is depreciation on new machine. But the depreciation was how much? 7,000. So, transfer that depreciation to machine account and transfer to profit and loss account. So, how to record? That is to machine account, that is end of third year, 31st/3/2017, to machine account 7,000 and transfer that amount to profit and loss account. So, how to record? 31st/3/2017 by profit and loss account 7,000. Both the side will be 7,000. Hope you are clear with the problem. When there is more than one machine, so you have to record entry in that particular financial year. So better you write in the form of date, whatever the transaction have taken place, so that it will be easy for you to calculate as well as prepare ledger accounts. So my dear students, hope you have understood the problem. In my next session, I am going to discuss calculation of depreciation under straight line method. We shall discuss one more problem on straight line method, that is quite different problem on this method. So hope you have understood the problem. See you all in my next session with a new problem. Till then, take care. Thank you.